SUI, it's outperforming pretty much everything now. And most importantly, it's outperforming Solana. And Solana is, my chosen one. I have 90% of my net worth in Solana. But SUI, I've obviously been granted some tokens as being part of the foundation. They're locked up, etc. But I'm not going to sell. In fact, no, some of them are unlocked. I'm not going to sell. In fact, I've been buying personally because I think it's a chosen one. I think it's going to do really well. Yes, there's a low free float, which everyone goes, oh my God, they're going to be dumping on you. But a lot of the unlock happened a few months ago. Really, it's now pretty phased and pretty low key. But in a bull market, in a really, really interesting protocol that has attention, a low free float means a smaller amount of money drives a larger price rise. The reverse can happen in the bear market too. So just beware, but we're in bull market times. One of what I like about SUI is what they're really trying to do is the team came out of Facebook or Meta. But the point being is it's really fast. The latency of the chain is less than 1 second for finality, which is, if you think half the stuff is like minutes, the latency is fast enough for gaming, financial markets, that kind of stuff.
Raoul Pal, CEO of Real Vision, highlights a Layer 1 blockchain that he believes will become a major force to be reckoned with. Paul explains that Solana competitor SUI is acting like it's going to be one of the top elected officials of the big channels, even the chosen one. According to him, people should pay attention to SUI amid bullish signals, technological upgrades, and growing adoption. Paul says one of the bullish signals SUI is giving includes breaking out of an inverse head and shoulders pattern. More importantly, it broke the bearish trend against Solana. Its relative strength in a side market deserves to be taken into account. According to Paul, the game is a powerful creation in the sequel that could be reactivated, and announcing that Circle will launch the USDC stablecoin on the platform is another good step. But SUI is only in its infancy, and the proof will have to be provided by successful apps that evolve by leveraging the technology stack. According to Raoul Pal, this one coin is outperforming Solana and has the potential to become one of the best performing coins of this cycle. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
FOMC markets are always unreadable around events like this. You need a day or two to settle down. I've been saying this for a long time. Inflation is falling. Rates were at 5.5%, they're now at 5%. Inflation, headline inflation's at 2.5%. Half the people on the internet is like, oh my God, inflation's so high. It's 2.5% and it's falling. Inflation will come at the end of the cycle. This is so normal. Inflation is going to keep falling. It'll be below 2%. And guess what? I think rates are coming below 2% and people don't understand this yet. And so I think rates will continue to be cut. The market doesn't understand this. Rates are part of financial conditions that should continue to improve. But generally speaking, risk assets should be doing really well. And risk assets are doing really well because guess what? As I've talked about, bleated about, explained to you in the Everything Code is global liquidity. This is the time to have to roll the debts. Global liquidity is going to go up. And hey presto, it's going up just like it did every other time.
Paul suggests that Bitcoin is primed for a significant surge due to increased global liquidity. He shared insights highlighting that Bitcoin's value is positively correlated with global liquidity. A chart he provided indicates that the leading cryptocurrency could hit $90,000 by November. Paul highlights the historical relationship between Bitcoin and the global money supply, M2, suggesting that Bitcoin is primed for a major surge. He said, very close. GMI, Global Macro Investor, total global liquidity, and Bitcoin. This ratio highlights Bitcoin's potential to skyrocket as liquidity conditions change. Real Vision macroeconomics expert Julian Biddle echoed this sentiment, noting that macroeconomic conditions are injecting more liquidity into the market, which is favorable for risk assets like Bitcoin. He commented, hang on, bulls. It felt stuck in a boring zone, but there's finally light at the end of the tunnel. Liquidity is increasing again, and Bitcoin, being extremely sensitive to changes in liquidity conditions, has impressive potential to scale as new liquidity flows into the system. Positive expectations from experts regarding the increase in global liquidity indicate that Bitcoin could experience significant movements in the near future. However, given the volatile nature of cryptocurrency markets and the uncertainty of macroeconomic factors, it is essential for investors to be cautious and keep a close eye on the market. Paul sheds light on the banana zone and its everything code framework, which provides a comprehensive understanding of how global liquidity cycles influence asset prices, particularly in the technology and cryptocurrency sectors. According to Paul, the everything code is a conceptual framework that suggests that the business cycle repeats itself as liquidity increases to depreciate the currency and pay debt renewals. This cyclical phenomenon has been observed since the 2008 global financial crisis, when central banks reset interest payments to zero and initiated a new debt maturity cycle every 3 to 4 years. He says the macroeconomic summer and fall are all about increasing liquidity, with liquidity expected to increase through the end of 2025. Furthermore, growth assets like technology and cryptocurrencies tend to perform exceptionally well during these periods due to their adoption-driven secular trends. Due to its outperformance, the cryptocurrency banana zone is considerably stronger than the overly broad tech summer and bust. However, assets such as tech stocks and cryptocurrencies are doing well during this time. Paul believes that the rapid adoption of cryptocurrencies and their competitive potential will lead to exponential market capitalization. He predicts that in 2 weeks, the banana zone will arrive, triggering exponential growth and chaotic events. The banana zone, where asset prices skyrocket, begins with liquidity growth during the macroeconomic summer. Paul warns that market conditions may change even if the repeating cycle of everything code predicts this transformation. Investors can expect sharp corrections or prolonged sideways movements. He further noted that the most important play is altcoin season, or the banana zone, referring to massive altcoin rallies and parabolic price charts. Bitcoin remains dominant with a 54.7% market share. For altcoin season to begin, it needs to drop to the average level of 40%, as was the case during the last cycle. According to Paul, everything code is the best way to understand how markets work and navigate the banana zone and beyond. Through disciplined portfolio management techniques, he advises investors to be patient, take the long-term view, and be careful with their money. Paul cautions investors against making hasty judgments based on media hype. He recommends avoiding leverage, investing primarily in the 3 to 5 largest market cap tokens, and allocating 10% to high-risk altcoins. Paul says a new wave of liquidity is about to hit financial markets, which will change the climate for risk assets. We also think that on a global scale, the Japanese could intervene in their currency by selling dollars, which would add dollars to the global system. We also think that most countries will add liquidity as well. We think China needs to increase its liquidity. Paul also cites the implementation of Basel IV, a new banking regulation that will require banks to maintain higher liquidity levels, and weakness in the commercial real estate sector as other possible sources of liquidity. Basel IV is coming next year, which means banks are buying more bonds, so we think there are plenty of sources of liquidity. Commercial real estate is another. If the situation remains bad enough, the Federal Reserve could eventually create a special vehicle to place all these loans. We've seen this in the past, especially during the savings and loan crisis in the early 1990s. It's another method of liquidity. There are so many possibilities, some of which we haven't even touched on.